In the great globe game of economic supremacy, two giants stand tall than the rest. But as the 21st century unfolds, the question on everyone's mind is, will China outpace the United States to become the world's leading economy? Stay tuned to find out. Given China's economic issues and the US economy's impressive 2023 performance, it seems unlikely that China's GDP will surpass that of the US. In nominal terms, the US gross domestic product increased by 6.3% in 2023, while China's increased by 4.6%. China's economy is not as strong as the US economy, as it is coming out of the pandemic. As the Federal Reserve raised interest rates to tackle an inflation crisis not seen in decades, the US was widely predicted to enter a recession at the start of 2023. Conversely, following the COVID-19 closure, China's economy was predicted to rebound spectacularly when it reopened its doors to trade. The US economy, however, closed the year strong, rising 3.3% in real, inflation-adjusted terms in the fourth quarter after expanding 4.9% in the third, according to the week's GDP figures. You might be aware of the quote, "Don't judge a book by its cover." Hence, this became true in the case of China as well. Even though we predicted low economic growth for China, through their constant effort, China has been able to grow much further than that. However, China is having its worst deflationary stretch in almost 25 years, in addition to a real estate crisis that has lasted for years. In addition, the nation's exports, which were previously a vital pillar of prosperity, decreased in 2023, and the rate of youth unemployment skyrocketed. Additionally, burdened by excessive debt are the municipal governments. Although the Xi Jinping administration stated that the GDP grew by 5.2% in 2023, there are concerns that this isn't a realistic assessment of the situation. To be sure, there are other methods to gauge a nation's economic size outside nominal GDP. Additionally, buying power parity, which attempts to account for price variations between nations for same commodity or service, is a tool used by economists. Based on Bloomberg's economic calculations, China surpassed the US in 2016. However, many analysts don't believe that's the most accurate approach to gauge economic power in international affairs. Nominal GDP is seen to be a better indicator of that. Chinese President Xi Jinping arbitrary and autocratic use of power throughout the economy and society, according to Peterson Institute of International Economics. President Adam Posen has significantly exacerbated the nation's inherent economic problems, as reported by the Bloomberg news agency. According to Posen, Jinping's reign has scared off people and small enterprises who are now hoarding cash because they don't know what will happen next. Posen, however, anticipated that the US may be about to see a pickup in productivity growth, which will enable the economy to expand more quickly without creating inflation. The last chapter in the Fed's effort to bring US inflation back to its objective of 2% has not yet been written though. We all have seen China as a country that supports entrepreneurs. Even if we go to China's streets, we will see a lot of new brands owned by the public. But the situation is entirely different now. The government itself is not ready to show support for them. What might be the reason for this mind shift? With a 6.3% increase in GDP, the United States has surpassed China to occupy the top spot in the world economy in 2023, while China's GDP increased by only 4.6%. Prior forecasts indicate that China's economic growth would surpass that of the US. As it overcomes the obstacles used by the pandemic, the US economy seems to be in a better place than China's. With the Federal Reserve's decision to hike interest rates in reaction to decades-high inflation, fears of a US recession were voiced at the beginning of 2023. China, on the other hand, was expected to have a rapid recovery as its economy was fully reopened following the COVID-19 shutdown. Recent GDP GDP data, however, has revealed a different story that highlights the US economy's resilience. After expanding by 4.9% in the third quarter, the US saw real inflation-adjusted growth of 3.3% in the fourth quarter of 2023. China, in the meantime, is confronted with a number of difficulties, such as a protracted real estate crisis, the greatest deflation it has seen in 25 years, a decline in exports in 2023, and a rise in youth unemployment. What do you think are the reasons of the slow growth of the Chinese economy? What pressures on China to deflation have gotten harsher recently? November 2023 had the largest decline in the consumer price index in 3 years. Even more concerning is the fact that the producer price inflation has been negative for over a year. Although falling pig prices contributed to the significant decline in consumer prices, November's core consumer price index inflation, which does not include food and energy, was only marginally positive, indicating weak domestic demand. The GDP deflator, which is a gauge of total inflation in an economy, was negative in China throughout the second and third quarters of this year and is probably going to remain negative throughout the year. If prices continue to fall, consumers and businesses will likely put off buying and investing in anticipation of further price declines. A deflationary spiral would lead to lower production, falling wages, and rising unemployment. Even now, rising deflation pressures are pushing up real borrowing costs, adding to the country's already high debt burden. One estimate suggests that the inflation-adjusted real borrowing costs in China have reached their highest levels since 2016. The first big question for China in 2024: will the government undertake the policy changes necessary to revive growth, and will an increasingly wary and reluctant private sector respond? Moreover, low confidence in a sustained recovery was expressed repeatedly by economists, business leaders, and working people during our recent trip to Beijing. Chinese consumer confidence remains at a historic low despite the short-lived improvement in early 2023. Households continue to park savings, which in previous years they would have spent on real estate or other purchases, in more liquid assets like bank deposits. Household bank deposits reached yet another record level of RMB 135 trillion at the end of November, according to People's Bank of China. Meanwhile, notwithstanding vigorous regulatory campaigns and crackdowns, private entrepreneurs' confidence is still poor. Investment in fixed assets by businesses is still weak. Over more than half a year, private investment has decreased year over year, primarily due to declining investments in real estate development. You might be wondering why your real estate is not performing well in China. Now you have the answer. This is due to the concerns existing in the Chinese economy, and people are now concerned about doing private investments. As Adam Posen refers to it, low confidence is a symptom of the economic long COVID that has afflicted the Chinese economy ever since it reopened. The Chinese government's arbitrary intervention in private sector operations, which culminated in its drastic response to the pandemic, is a major contributing factor to the ongoing bad health. Households and businesses have consequently grown less receptive to economic stimulus. In the housing sector, a number of support initiatives in 2023 have not significantly raised sales or restored trust. As one of us cautioned earlier this year, China's private sector activity is unlikely to increase unless the government's influence over economic matters is reduced. The third key question for 2024 is whether or not the private sectors will react to statements made by the government, or if more daring policy changes will be necessary to inspire newfound confidence and investment. The Chinese economy continues to be hindered by the property crisis, which also affects corporate and consumer confidence. Real estate sales have hardly increased in spite of the several initiatives the government has put forth this year to boost the housing market. Real estate developers developers are still having trouble with their liquidity difficulties due to slow sales. The government's real estate strategy has changed from encouraging demand to encouraging developer finance, maybe in response. Major state-owned banks have been urged by the authorities to lend more money to real estate developers, especially private ones, even if they don't have enough collateral. Not only do local investors experience a lack of confidence in China's economy, but according to figures from China's balance of payments, FDI is leaving the country at the unprecedented rate. In addition to declining to make new investments, several foreign companies are also liquidating their current holdings and sending a sizable portion of their profits back to headquarters. Hence, the news is showing that the government should strictly put forward policies to help the economy get back to normal. Will we be seeing this act anytime soon? Do let us know your thoughts in the comments. As we've journeyed through the intricate dance of economic power between China and the United States, one question looms large on the global stage. Will China surpass the US to become the world's leading economy? Stay tuned, subscribe, and hit the notification bell to never miss what comes next. In our upcoming videos, we'll be peeling back the layers of more global mysteries, economic puzzles, and technological marvels that are shaping our tomorrow. You won't want to miss it.